Hey everybody, good morning. It's Pete. Welcome to today's episode of Stocks for Breakfast. Today is Friday, March 6th, 2020, and today we're going to discuss two possible sectors or industries, whichever terminology you'd like to use, that are deservedly so getting hammered by coronavirus, but also when coronavirus gets fixed, solved, whatever terminology you want to use, will offer the biggest reward when that sector bounces. So I want to be clear, we're not talking about getting involved in them now. However, we do need to start making a watch list where, and I'm going to use this term very in context of trading, so I don't want to be disrespectful to anybody. In context of an overreaction where they are now getting crushed. There's really no other way to say, and deservedly so, because of the severity of coronavirus. We need to be emotionless speculators at this point and basically get to the point where we say, okay, who's being affected? What companies are being affected the worst by this right now? And when coronavirus has passed, which stocks stand to have an overreaction to the upside because that selling pressure and the negative connotation that goes with it, and deservedly so, which we'll talk about in a second. When that pressure is gone, when that selling pressure is gone, these should get the fastest move to the upside. And what I'm going to do, also we're gonna look at my favorite tactic again, because I hope everybody's starting to use it, because it is super simple to use and it works. That's the big thing. There's one particular stock today that we've been talking about a few times, and we're also going to talk about Netflix in a different way to really hammer home how to read the tape. And then we're going to finish up with understanding how to day trade again, using the tape, reading the tape, being a tape reader with those certain parameters on an intraday basis. Because of the severity of the news right now, and we're actually down again, we're going to take a look at the S&P futures in a second. Because of the volatility and the back and forth that we're having every day and being so sensitive to the news, I'm a little uncomfortable right now calling out a little bit longer term plays and exact entries and exits, which I do normally do. We just happen to have started the show around a period of time when the coronavirus hit. So I'm being very respectful because I don't know anybody's experience level. However, as I've mentioned a couple of times in the past now, that day trading this market, if you're at your seat full time and you're day trading, you can actually find some terrific opportunities where you have a really solid line in the sand to measure risk. And I'm going to use probably one of our most popular stocks to just give an example of how to map this out during the day. And here's the key. This is really the biggest thing. When 9:30 comes and the stock market opens, I want you to know exactly what you're supposed to do. Now, we never know exactly what's going to happen, but what is important is you know what's probably going to happen and exactly what you're going to do. And that's what separates somebody from who's just a chart reader that struggles to somebody who becomes a tape reader and actually understands how to make money. So we're going to go ahead right over to, we're going to look at the futures first, a couple of news stories that I think are in play today. We're going to talk about that sector, two sectors that I've mentioned, and we're also going to get in and do a little bit of sleuthing where we're going to take a look and find some sectors that are actually showing relative strength right now that would warrant consideration to possibly look to buy despite all the moves to the downside. So we're going to hop over to the charts, and probably the biggest thing we're actually going to start right out with discussing the stocks that I meant that might be getting a bounce to the downside in such a big way that it could present an opportunity. And of course, I'm talking about these two sectors here, which is cruise lines and airlines. Very, very important to understand that these two sectors, deservedly so, and I'm not talking about the companies, I'm talking about the severity of coronavirus. Deservedly so, they're shutting down. There was another cruise ship, I believe. Oh, here, actually, it's right here. 3,500 passengers ordered off the California coast. California has already declared a state of emergency. And again, I'm not being disrespectful. If you happen to know anybody, I'm talking from a pure trading perspective, looking for potential future opportunities. I want to make it clear, I'm not talking about right now. If and when these stocks bottom out, which let's all say when they bottom out because coronavirus has been eradicated, these stocks are getting pushed to the downside so hard right now we need to keep in the back of our mind that there's going to be an opportunity to buy some of these stocks for a little bit longer term play, because we probably wouldn't be able to get them at the price. If you remember, RCL actually was trading at 52-week highs just prior to this happening. So you want to get in there, and I'm actually going to show you in a couple of minutes when we start to look at a couple of scans, how to find groups of stocks using a free software, which is actually kind of cool. So we're going to pull that off the screen, and just as we've been doing recently, we want to start out with where the S&P futures are trading. This blue line right here is where we closed yesterday. So you see we had a little bit of a relief rally after selling off hard again, but very quickly we pulled back in, kind of went into this trading range overnight. But then as the U.S. equity markets start to wake up, right now it's about 3 hours before the market opens, we actually started to sell off again. So as of right now, there's really no reason to start looking long again. And again, the question that I'm getting, and deservedly so, how do I know when it's time to start getting long? Because quite frankly, most people, most traders only trade long, which means that they're only looking for spots to buy. And there's absolutely nothing wrong with that. But if you do, again, you want to see some minimum proof. And I'm actually going to come back on the screen here for a second. If you're going to look to start to buy intraday as a day trader, or maybe even as a swing trader, but let's stick with the day trading scenario right now, because I think that's the most lucrative opportunity right now, where you could manage your downside, where there's not going to be overnight news you're exposed to and that kind of stuff. You want to see either a bullish U-turn on whatever time frame you're trading, preferably the higher time frame that you're trading. So if you're entering on the 5-minute chart, you want to see it on the 15. And that shows some short-term reversal. And again, that's not even the best case scenario right now. Let's be clear. If you're bidding into the stocks moving lower and you're not in bullish order flow anymore, or you can't make an argument for there being bullish order flow, and you're looking for a spot to buy, that's a really aggressive trade. And it's not one that I would recommend if you're a rookie trader, if you don't have a track record of proven P&L, profit and loss, revenue. And by the way, if you're a trader, P&L is the terminology. Nobody really says income or anything along those lines. If you're working in a trading floor, it's P&L. What's your P&L this month? How'd you do today? What was your P&L? But if you decide to do that, which aggressive traders will, and when I say aggressive, I mean somebody who understands risk, who has no problem pulling the plug if the trade doesn't work out, which is absolutely where you want to get to. If the trade doesn't work out, you pull the plug. Doesn't work out, you pull the plug, you go to the next one. That's what trading means. You don't emotionally say, I know the stock, I know it's going to turn around, it has to turn around. Don't do that. Be disciplined and say, that's where I'm getting in, that's where I'm getting out. If this happens, then I'm doing this. That's how you last in this business, because you keep the losses small, and then you learn to do it on the other side, where you start to say, I understand now, if this happens, I'm going to hold my trade. If this happens, I'm going to hold my trade. And that's what separates chart readers from tape readers. Again, I'm going to keep hammering that home, because that's what I want to teach you to do, to become a tape reader. In the SPY, we'll go back to the charts right now. In the SPY, what we want to see, or in any stock that you might happen to be looking for, I'm actually go to a little bit higher time frame. You want to see something like this. Okay, it didn't hold, but that's the minimum criteria. And I'm on the hourly chart here. You want to see the minimum criteria, something like this, where you have either inside candle well bid, or just straight up well bid, like you see here. Inside candle well bid, well bid, well bid, well bid. These are the minimum criteria that you want to see, whether it's on the hourly chart. I don't even know if we'll see any on the 15-minute chart. Not in the last couple of days, really. But that would be the minimum criteria, that well bid. And if you do see well bid, the way to trade that is you want to see the next candlestick following through. Let me zoom this out. You want to see the next candlestick following through, and make sure you have a good, disciplined stop loss. Now, what's interesting about the stop loss in this market too, there's plenty of liquidity because the volume is up so high right now. You have a choice. You can manually place your stop loss, or you can place it in with your software. I'm not going to suggest one way or the other. I will say that if you're an emotional trader during this market and you're having a tough time making decisions, you should be using the software to place the stop loss, and probably be using a market order, because a stop limit order with the volatility might not actually get filled. A stop limit order means you want to get out at this price or better. But the problem is sometimes if the market moves fast through that price, you actually don't get filled. So the stock can keep moving against you. I've seen it happen to newer traders where they didn't understand why that happened, and it really happened because of liquidity. Sometimes they're moving so fast through price levels, and if you force it to say, I want that price or nothing, sometimes there's a chance you won't get filled. And you might have experienced that when you're looking to get into a trade too, into a fast market. We say, I want to buy it at $50, and it just flies through there, and you actually never got filled. So in this case here, with the kind of market we have, it's probably a little bit smarter to place limit order. So these are the levels that we're looking at. 29.30 in the futures. Keep an eye on that today. This is the high, basically right around 29.95, where we kind of consolidated. But then yesterday's low. If we are fortunate enough today to turn positive on from yesterday's close to today's price action, if we happen to bounce, and most likely that'll be in the afternoon if it does happen, that's a spot where you want to say to yourself, all right, if I get long at 130 and the market is starting to bounce, we get all the way back to where the market turns positive, that's a trade you want to hold into the close. And if you're really aggressive, because maybe there was some good news out, who knows, maybe even hold it overnight. I'm personally not holding anything overnight in this particular scenario right now. It's mostly day trading. What I'm giving you is if then scenarios. If we can climb all the way back up to yesterday's close and turn positive, that should be a really strong move into the close. Because if the market can close all the way back up to there, that means something's going on with buying, whether it's algorithms, something happened. So be aware that you could make your entire week in 1 or 2 hours at the end of the day if price action happens to move in that direction. So this is what it means to be a real trader. You're building these scenarios. If this happens, I know exactly what I'm doing. If this happens, I know exactly what I'm doing. If the market continues to fall to the downside, then what we're going to end up doing is you will end up using your hourly charts just to look to see, okay, we're well offered. As long as the market stays well offered on the hourly chart, or especially the hourly chart, 15 will change too quickly. The hourly chart, and trading below the open on that candlestick, you can confidently hold your short sales because the current price is now matching the news selling pressure. That's kind of a good way to reset your mind. Every single hour you say, okay, the new hour starts. Is the current buying or selling matching the bias that I have for wanting to be long or short? Just want to touch on a couple of stories here. A lot of people have been emailing me in reference to rate cuts, whether or not that's going to turn the market around. This is such a global problem right now. Rate cuts are not going to solve supply chain issues. We discussed that, and what really is going to be affected is next quarter, and possibly even the quarter after that, is whether or not stores can get inventory from China, which right now they can. And we're going to touch on Costco a little bit here, where Costco had earnings yesterday. They actually beat earnings because they can't even keep stuff on the shelf. Stock's actually trading a little bit lower right now with the rest of the market, but this is what's going on right now. They're super busy right now heading into this quarter, but if you go to a Costco right now, a lot of them are empty. So I think we have a little bit more to fear for the next quarter, because don't forget, when you buy a stock, you're buying future earnings. It might report really good because of what happened, but it's really the guidance and what they believe is going to happen in the future that you're buying, whether the next 3 months, 6 months, next year, however long you hold stock yourself. So it's going to be super interesting. And basically what I'm trying to tell you right now is to pay attention to certain types of headlines in your favorite stocks that do have inventory or possibly can't get inventory, and how that's going to affect them going forward. So Costco, by the way, also is something that we're going to have in our watch list today. So we're actually going to pop that up on a daily chart to keep an eye on it. So obviously we know that we broke out to 52-week highs yesterday. It actually closed lower and actually closed lower after earnings. It's going to be in my watch list today, and here's the key. It's well bid here, higher high, higher low. Even though it closed negative here, it still remained well bid. Higher high and higher low, and well bid again and well bid again. So you have to learn to read the notes of the market a little bit deeper than just saying it was up or down. Yes, if you're in the position and it closes down, obviously that hurts. However, institutions are still supporting the stock. So 313 is where it's trading right now. The number that we should be looking at is yesterday's low, which was 313.20. So it's actually trading just below yesterday's low. So the game plan for Costco today is to be looking at yesterday's low, whether or not that's going to hold the support, because we're kind of trading right there right now. if we barely trade below yesterday's low and then start to rally, this would be a stock that I'd be looking to trade out of the opening range. So what that means is, which we said we're going to actually talk about today, you look at the opening price. I'm going to do it 2 days in a row here. Assuming you want to be long the stock, you look at the opening price and you say, okay, if the stock is above or below, in this case, for a stock you want to be long, if it's above the opening price, and again, this is the 15-minute window, and that's the open from 2 days ago, you look at the opening price and you say, I'm doing nothing until it's trading above that opening price. I'm not even looking for an entry because I want what I believe increases the odds of me making a profitable trade. And you can see what happened the rest of the day, and we actually closed strong, right? Plus the stock was well bid. Remember what I just showed you on the daily chart. Well bid meant higher highs, higher lows, institutions keeping the activity in that stock, supporting the stock at the lows, pushing it higher, and creating new highs. At this point right here is where you would start looking for entries. Now the opposite, excuse me, I'm going to use this same right here. What's interesting here is here's the open, here's the previous day's high. So you had basically $6 to the previous day's high. Here's the open, and you'd be only looking for longs above the opening price. Now, what ends up happening, and this is kind of an interesting scenario here. I'm going to use Costco to illustrate a couple of things. Number one, again, here's the opening price in a stock you want it to be long. Profit potential, or what we call room to go up to the previous day's high. You can see we actually end up getting an inside candle at the previous day's high. We bounce through, but then we immediately go into an inside candle again. And if you remember, we talked about this on the daily chart in the previous video, that even though this isn't a daily chart, I want to illustrate the point again so it's in your mind and you're using it when you're watching the tape. Breakouts that lead into inside days are very commonly a reversal. And you can see we actually started getting that. Something else that we talked about quite a bit is, again, as you're starting to break out or trade higher, or in the opposite, trading low, or in this case, trading higher, when you're trading higher, you want to see more of this. Green, well bid, well bid, well bid, right? And green. Well, we see inside candlestick, close below the open, close below the open. Try and make it back. Okay, one last push, close below the open again, and close below the open again. So this is a kind of like a prediction tool where you actually start to dig into the candlesticks and say, wait a minute, if this stock is going higher, I should see more of this. I'm not seeing more of this. So this is a situation where you would probably tighten up your trailing stop. That's not second guessing. That's good trading. If you think that what I just said is, oh, anybody can look at it after the fact, that's bullshit. This is what real traders do. Real traders pay attention to these things, and that's how you keep your profits and understand when to tighten up the trailing stop. Now, what's kind of cool here is we're going to jump out to the hourly chart on Costco. And remember, we said we're going to be using these as barometers. Excuse me, the hourly 1 hour. And we're going to go into whether or not you should still be looking for long. So remember what I just said before. This is the opening price in Costco. And here's yesterday, right? You can see almost the whole day, only one hour was negative, right? So that negative hour, you'd be less inclined to be looking for long unless you happen to be long already. This candle here, opening price. So look at this. The rest of the day, negative red candlesticks on the hourly chart in Costco. So if we go back to the 15-minute chart, here's the day. Let me show the 2 days again. Here's the day. Despite the fact that it's above the opening price, you don't get that second piece of your argument where the hourly candlestick is not positive. So you make a decision right now. Is this the best opportunity in the right now for me to look to buy long, or to start to buy the stock? Yes, it's above the opening price. Yes, it's above the opening trading range. But we pulled back into yesterday, and the rest of the day, the hourly chart was red. All of those candlesticks. I'll show you one more time. You can see they were all red. Now, probably some fluctuations in there, but I hope my point is you're getting the idea of what to look at on an intraday basis. Trading doesn't need to be difficult, but it does need to be structured. So the last thing I want to discuss here today is ways to look for opportunities in possible sectors that are strong while the market's going down. The same way we looked at the airlines and the cruise lines are deservedly getting hit. By the way, oil is also down 3% this morning. Healthcare stocks have been very strong. So which of those healthcare stocks do you take a look at? Again, that's over the last week. So what you would essentially do is you go into healthcare, and remember the criteria that we use. You can see there's 915 stocks that meet this criteria. I want to personally sort it by what I look at every day is I'm looking for stocks that have at least 2 million shares traded per day. You can see that knocked off 800 stocks that don't meet that criteria. And then I also want to take a look at stocks that have at least $1.50 average true range. And the reason we do that is because we want to have enough movement in the stock where we have an opportunity to make money. And you can see that whittled it down to 25 stocks. So we went from 915 stocks all the way down to 25, and now we can filter it down even a little bit stronger. Are there any stocks that are trading above what many consider a short-term moving average for bullish or bearish? And we'll see if any of them are trading above the 20-period moving average. And we have 19 of them. So then we're actually going to take a look at all 19 of those stocks and see which ones meet the criteria that we would want to put on a trade. Actually, you know what? I want to make sure that we're only looking at stocks here as well. Get off any ETFs there. So then what you would do is you would actually go into those stocks and you would go in and take a look and see if there's room to go. I don't want to do that now because the video is running a little bit long, but I think it was kind of interesting and just a really good practice for you to do every single day, because you should be having in your mind, we've discussed it a few times, relative strength, relative weakness. Obviously, if the market's strong, sectors are strong, you want to be long. Those are the best arguments for being long. However, if the market's weak and certain stocks are strong, whether it was just yesterday they were strong, the last week or the last month, depending on what time frame you're looking at for the market, you should be making a list to put them in your tracking journal of some stocks that that are fighting or doing the opposite of what the market's doing. So if the market happens to turn around, those would be the first stocks you go to because they had buying when the market was weak. So thank you so much for watching Stocks for Breakfast today. It is March 6, 2020. My name is Pete Renzulli. I really appreciate your time. If you find these videos helpful, please click below and subscribe. Have a great weekend and good trading today, everybody.